Alright, good afternoon, everyone. Today is Wednesday, the 4th day of September 2024. Wow. I just can't believe it's the 4th day of September already. October, November. 2 more months. 2 more months we'll be voting. Oh, that is craziness. Anyway, yeah, so the stuff that I wanted to go over today, now you can see right here, the sniper is done, right? Any changes that I make to the sniper right now are going to be changes that are done in the background. But as you all know, every time I get into one of these webinars, I have to start out by showing you guys how to take the trial and showing you how to get the data and showing you how to sign up for the charts and all that stuff. Alright. Okay. Getting better where you're not healthy, Wayne? On the ES, where was my sell spot this morning? On the ES, where was my sell spot this morning? I'll get to that in just a minute, Casey. Okay. I had today on the ES. I had 5 different sell spots. There were a whole bunch of them from some other things that I am going to introduce to you probably in next week's meeting. That's going to be going on in the background. Stuff that you're not going to see. Because it's just better off you don't. But I might give you a sneak peek at some things. But let's just look at the charts. Now, if you are trying to close this, if you are new to all this, for Target View Trades, the only way Target View Trades is going to work is if you have Trading View charts. Alright, so you have to get Trading View charts. There are multiple versions of Trading View charts. You can get the free version of Trading View charts if you want to, but with the free version, you're not going to get the benefit of the alerts, and the alerts are one of the biggest things to give you all these alerts over here on the side. You can have them sent to your phone or wherever you want to have them sent. But you won't have alerts with the free version, but you can use the free version. What you will need to do is sign up for the charts at TradingView and give me your TradingView login ID. Like mine is TV Trades. You know, when you hover over this, when you hover over that, it says I'm logged in as TV Trades. All right, that's what you need to send to me when you sign up for the trial. The charts, to get the charts, if you go here to the home page at targetviewtrades.com, first of all, look, I set up this new sniper page. It's just all about the sniper, okay? And you can, well, it's not really, there's no more than, if you're not new here, if you've been watching this for the past month as this developed into things, into its own tool, then there's nothing new here for you. But it does give you a lot of information. If you go here to take the trial, if you haven't taken a trial with us yet, it's only $25 a week after the 3-day trial. All right, you start out with a three-day free trial. It's $25 a week after that if you want to do the weekly. $90 a month after that if you want to do the monthly. It's 10% discount over that, or $9.97 a year if you want to do the annual. It's a 23% discount over the weekly. However you want to do it, it doesn't. It's up to you. You are going to need to get TradingView charts. To get the TradingView charts, you just go here. Again, this is at targetviewtrades.com. Click on Getting Charts. You can go here to TradingView charts. This is not going to give you the free version, okay? This is giving the options for the, you got to click on monthly. It's giving the options for the Essential, which is 2 charts, and you get 20 technical alerts. The Plus, which is 4 charts and 100 technical alerts, or the Premium, which is 8 charts and 400 technical alerts. Technical alerts are the important things. That's what we trigger from our charts, okay, the technical alerts. Now you get price alerts too, but the price alerts are stuff that you draw on lines and stuff like that. The technical alerts are the ones that come from the actual code. There is a free version. If I were not logged in, if I log out like this, right here, 0 forever, sign up, no credit card needed. That's how you get the free version right there, okay? That's all you have to do to get the free version. Now let me sign back in again. Hopefully it'll just let me right in. Nope, it's going to give me a number. Hold on. 41905. Okay. That's how you get the charts. Alright, you have to have the charts to use to use Target View Trades. So, back here now. Yeah, that's the basics of how to get the charts. You have to also get data. All right, if you're going to trade futures. If you're not trading futures, if you're trading stocks, then you don't need to worry about the data. But if you're trading futures, then you have to get the data too. All right, the data is $7 a month plus tax. To get the data, you go here, you go to TV trades, go to account and billing. Oh, I mean, yours is going to say whatever your name is. Go to account and billing. It's going to bring you to this page right here. And this is what you need. CME, CBOT, NYMEX, CME Group. All right, it's $7 a month plus tax. Tax is 60 cents, I think. Depending where you say you lived when you signed up. All right, that's how that works. So back here, and we'll get into what we want to get into. All right. So one of the questions that Casey asked on the ES this morning, what was my sell spot? What time frame are you looking at? You know, are you looking at a larger time frame to find a sell spot? You know, using just the TV trades range sniper, there was one sell spot right here. But there's on the 2-minute. Okay. Well, you can't really use the sniper on the 2-minute. The sniper is not made for that type of a time frame. But if you use the regular TV trades on the 2-minute, then today in the morning session, well, it doesn't give by default it doesn't give any shorts. But you said sell spot, so we'll go to sells. All right, let's just take off the longs and we'll just leave the shorts on. Okay. Did you have the bias level on or off, Casey? Off. Okay, so we'll leave the bias level off. This morning on the 2-minute, the first short was right there, the next short was right there, the next short was right here. When the open happened right here, it had a nice short right here that worked out pretty well. If we go back in time, because we can with this, you can go back to right here and see at the time it said your stop had to be on this right here, on this trade right here. Your stop should have been right here, 97.75, 97.25. I'm sorry, 97.25. So your entry point would have been here at 91.25, and your stop would have been just one tick above right there, I believe. So it gave a nice run down. Your first target was 54.75, and your next target was 44.25. So the targets were a long way down. Now this is one of the things that was in the beta. Okay, if the targets are a long way away like that, one of the things that was in the beta that you can do is change a pivot look back. See, if you go here and you change a pivot look back to a smaller number, then these, oops, if I click off of it, these should get closer. Should. It's not always going to be the case. Right, in this case, it doesn't seem like it was the case. It depends on where the pivots actually are, but a lot of times they're going to end up getting smaller. But it wasn't the case in this one. But that's why that was put there. If your targets end up being too big. The next thing that you can do, if that happens to be the case, is just look left. Right here would be a good target. If you had this was your short, right here would be a good target. 855 was that one? Yeah, it was right there. That was your first target right there. Okay, so that would have been the first trade of the morning right there. It was a little pre-market at 9:14, but that would have been the first trade of the morning. And then the next one, you said where was the sell, right? And this is 10 o'clock when, actually 9:30 when it opened up. There it was right there. Oops, nope, it wasn't right there. Okay, it almost put one in there, but it didn't. And so as we go through here, you wait until the news comes out, because we had high impact news come out at 10 o'clock. So you probably don't want to trade right at 10 o'clock when you get that. Probably don't want to trade right there when that happens. Right on the news. Let the news go by, and we'll see what happens next. There, nope, that wasn't the next one yet. But this is, this is what it looks like. I don't know what it ended up being. But in the morning session, I was trading on the... Oh, this is the NQ. What am I even... This is the NQ. You didn't correct me. You did correct me. Alright, so we'll go to the ES now. I was wondering why it was so many points. You say the ES was 6 points, a 6-point stop? Alright, well that's the NQ. Sorry. I just messed all that up, but it's going to look pretty similar. On the ES, okay, so you didn't get the short in here. Okay, now we gotta go all the way to the end. I don't know where the short started. Let's see. All right. So it looks like this right here was the first short. Okay, so the stop on this one would have been 4.5 points instead of 6 points. Right, your stop would have been right up above this level right here. And so it came pretty close to stopping you out right at the beginning there. I don't know how it all worked out, but now your first target was probably right here, your next target was probably right here, the next target was probably down here. But that was the first short right there, Casey. Okay. Let's see. Hang on, Wayne. Alright, but isn't it better to use TV trades on range bars? It is. This is using just the regular TV trades. This isn't using the sniper, Wayne. The sniper has to be. It has to be on range bars. Okay. Sorry I messed that up there for a minute, Casey. But this would have been the first trade right here. This would have been the first short. And you see it did pretty well. I don't know if I take it off of the replay. This was, the first short was right here at 11.16. Right there was the first short at 11.16. The first target was 55.21. So it didn't hit the first target until all the way over here. That first target was a long way down. And I think we might be able to adjust the targets on this one. If we make the target pivot smaller. Nope, it didn't change it at all. Sometimes it will, sometimes it won't. In this case here, it's just the way the market was structured. But you had that short there, you had that short there. Now this one went down into profit a little bit, and the stop was right here. Right here, the stop was at 31.75. Right, this right here. No, I'm sorry, we're on the wrong one. Let me go here, we'll do the replay again. The stop on this one was at 43.75. 43.75. So the high of this bar, I don't know what the high of this bar was, but it was pretty darn close. 43.50. It's pretty darn close to stopping you out right there. It looks like it ended up working out if it didn't stop you out right there. But that was that one. And is it different on a 7 range? Oh yeah, it's going to be a lot different on a 7 range. And are you still using TV trades on a 7 range? Because the range bars, you know, they have no time element associated with them at all. It's going to be a lot different on a 7 range. You're going to have a lot more trades. A lot more trades on a 7 range. If you do Alt and hit the back arrow, it'll shove this thing all the way back. Hang on. Whoa, I went too far. Sorry about that. Here it is. So on the 7 range, this was the first trade right here. Now the way that I manage the stops on the 7 range, I move the stop to break even after 4 ticks in profit when I'm on a 7 range ES. Alright, so I would have gotten a break even on this trade right here. And then the next short was over here, so I would have gotten some profit on that move down. And the next short was right here, some profit on that move down. The next short was right here, that would have been a break even trade. Next short was right here, probably a break even trade again. This one here would have stopped me out. And this one right here would have been some profit. Remember, the idea behind all this is not to trade 100 times. You know, I mean, you can if that's what you really want to do. You can get in there and trade a whole bunch of times, but the idea is to get in there and make some money and get out. You know what I mean? You don't want to trade 100 times. You don't want to overtrade. You just want to have some amount of money that you want to get, a daily goal that you want to achieve. Get in there, get your daily goal, and get out. Alright, now this is using the TV trades. I went to the TV trades because you first asked about the minute chart. Now, if we look at the sniper instead of the TV trades, then it's going to be different. And I don't break the sniper down between... I do break it down between longs and shorts, don't I? I did, yeah. So if we just put the short arrows on for the sniper... oops, sorry, I didn't do that. Did I break it down between longs and shorts? I didn't. No, you only get the regular sniping, and that's both directions, or the aggressive. Now, I had the bias level turned on by default. I turned the bias level on because originally, you know, with the sniper, originally I told you guys that the bias level was always going to be on, but then I made the sniper its own tool. So I gave you the option of turning that off. So if you turn that off, and if this is what, I don't know, Casey, is this what you were referring to? I don't know if this is what you were referring to when you said the shorts, if you're referring to the shorts on the sniper. Because the first shorts on the sniper after the open were, the very first short was right here. And that worked out fine. But this is what happened to the yellow. The yellow is in there if you want the yellow. The yellow is right here. You got to put it on though. This is the snipe alert notice. Now this is a visual notice. You're gonna get the snipe alert notice if you set the alert up. You know, you're gonna get the snipe alert notice over here on the side. I should probably go through all that with you. But all of this stuff over here, where you get the alert notice about the next up close, next down close. There's some things that I want to show you guys that are important you understand. This yellow arrow triggers when you are just about ready to get a sniper trade. Alright? Now, these purple sniper trades, they usually happen on the pivot. Alright? And the black ones, the aggressive ones, usually happen on the bar after it. Now, every time you get one of these, or even the black ones, it must continue the trend before you take the one after it. I mean, you see a lot of things like this right here, where it got this one right here, and it went enough to get the stop to break even. But then you got this one right here, and this didn't go anywhere. If this one did not continue the trend, and this is what the risk management and the trade management was about in the title of the webinar, managing the trade. All right. That's where the money is really made, is in the management of the trade. The entry is great. You get good entries. You get warnings ahead of time telling you it's a good entry point. That's all good. That's good stuff to have, good stuff to know. But knowing what to do when you get in a trade is really important. Remember the diamond principle that I went through a couple weeks ago? Every time you get into a trade, the first thing it should do is get to the prior swing high or low, right? And then it should exceed that prior swing high or low. Okay? The way I trade it, turn the bias on. Yeah, Wayne. The way that I trade, I like to be trading in one direction, so I would have the bias on. It is on by default. Okay? But when you get into a trade, I still haven't, I even tried to figure out how to draw these darn pictures. This was from Mike R. this morning. Okay, just want to make sure I hit the record button. Okay, so let's look at the picture again. Now, every trade, I said this last week, I think, but I'll say it again. The market's always doing the same thing, right? It's going up and pulling back and going up and pulling back and going up and pulling back. That was part of the diamond principle. When it goes up, the first thing it should do is go there, then it should double that. Okay? Remember? And then the pullback creates the distance that it should go again and double that. All right? The diamond principle. So the very first thing you should do is go here. All right? So every time you get into a trade, it should go there. If it does not go through there, then don't trade in that direction again. Don't do this right here, where the diamond, the diamond was like this, right? It went down like this. This is where it had to go through to continue, and it didn't make it. It went down like this. So now you just about got the diamond setting up on the other side. It went down so deep you did actually get the diamond setting up on the other side. Right there. Okay? If it does not go up here and exceed that level, then don't take this trade. Right? If this one does not exceed that level, don't take that trade. Same thing over here. If this one did not exceed that level, don't take that trade. I know that one worked out, but if it didn't exceed that level, don't take that trade. Okay? And I know sometimes you get a false signal like this one right here. I'm working on filtering those out. I have some really cool stuff that I'm working on it's going to be background stuff. If I put it there as indicators for you to look at, you would have indicators to look at, and that's really what I'm trying to avoid. I don't want you guys looking at a whole bunch of things that you don't really need to, because that's where people start getting, they start making judgment calls. And if it's just got an arrow, and it's got to come off a higher swing, that's not a judgment call. That's fact. Is it true? Did it come off a higher swing? Yes or no? No? no trade. True? Yes. Take the trade. All right. It's as simple as that. Every yellow arrow is not necessarily going to be followed by a snipe trade. Okay. Like this one right here. If the conditions change before you get that, this, like right here, when this happens, if you have the alert set up, when that happens, that's going to say the next down close. That's what the yellow arrow is saying. This one right here would say the next up close. This one right here would say the next up close, next up close. That's when that alert comes out. Right? When you get those yellow arrows. That's why a lot of these over here that say, you know, the YM said next down close, whatever that one said. I don't know what that said. Next up close. And then the next trade is not a YM up close. Okay? Because the conditions changed. Like this one right here that said the next down close, then you went to a blue background. You're not going to get a short trade, a snipe anyway, on a blue background. You're not going to get a short snipe on a blue background. Okay? It does look at the background. You know, like right here, it just gave us ES4 range sniper long, but right here it gave us the warning saying the next up close, and then there's the trade. So if we go to the end, this is an ES7 range, but if we go to the end, we'll see, I don't know what it's doing right here. Right, so this was the 7 range, just gave us the same signal. Right, basically. But if we bump this down to a 4 range, we'll see what it actually did do. A 4 range, here it is. So this is where it all happened right here just a minute ago. Said the next up close was right here. Now, you wouldn't have done this because this one here didn't put in a higher swing. Alright, so you wouldn't have done this one because that one didn't put in a higher swing. You would have done this. That would have been enough right there. Now, again, you're not looking to trade 1,000 times a day. I mean, you can, but it loses efficiency. Now, when you trade more, unless you're winning every single trade, it loses efficiency. I mean, those of you guys, a lot of you guys know about the morning session stuff that I do, right? Let me just go and look again who's in here. Yeah, most of you guys have been with me in the morning session. Not all of you, but most of you have been with me in the morning session. And so you know when I'm doing this stuff in here, when I get these results. And these results, the 2420 blueprint, where I quit trading after I get the goal for the day. If I were to continue trading, like this is my dollar average for the 2420 blueprint. I was averaging $7,521 an hour, quitting when I got the goal for the day. If I kept trading, you know, the dollar amount was bigger. Like this was the dollar amount quitting when I got the goal for the day, and this is when I finished trading the 2 hours every morning. So the dollar amount's certainly bigger, but the hourly rate isn't. The hourly rate's like $2,000 an hour less. So it's a lot less efficient to keep trading. You know, if you can make enough money by trading, quitting when you trade, get in there, get your goal, quit when you get what you want. Overtrading doesn't. I mean, you still can make money if you're good at it. You can still make more money, but I mean, if the money's, I don't know, it's not efficient. You lose efficiency. The more you trade, the less efficient it is. And you know, the commissions, they're not that big of an issue, for me anyway. But for most people, they're not that big of an issue. If you don't overtrade. If you start to overtrade and you get a lot of break evens, or you stop out and you have trouble getting back from the stop out, that's when it gets really inefficient. So the less opportunity you have for that to happen, the better off you are. So you know, most of you guys know what I do all the time anyway, so you understand that, you know, I trade for 2 hours every morning, but I usually get my goal for the day in the first 15 minutes. And I could be done every day in 15 minutes, most days. If you go back and look at this, most days, not all of them, but this was last month. Was that last month? Yeah, so far this month, yes. Last month I think there were 2 days that I worked more than 1, 2, 3, 4, 5. 5 days last month I worked more than 15 minutes. The month before that I think only 2. But it's there. The opportunity is there. Oops, it's not. The opportunity is there for you if you want it. See, this just put in the higher swing. We got the yellow arrow right here, and then we got red on a blue background. So that's telling you that it's about to change color here. The background's about to change color probably. So I mean, right now it's saying the next up close, but I wouldn't put a buy stop limit order on this one. I would wait for it to close and then get the trigger. Okay, let's see. You didn't get the trigger on that one, and there it just changed. It just changed color. Did you understand that? Because that's kind of important that you do understand what I meant by what I just said. Where if you have red on a blue background and it's saying the next up close is going to be your trade, you gotta wait for that up close. Wait until you get the trigger. Don't try to be proactive and put your order on ahead of time. Wait until you get the actual trigger. Okay? Because the red on the blue background, so it also, if you're using just the regular TV trades, the red on the blue background gives you a notice that says the next bar could be the long trade. I'm sorry, the next bar could be a short. I'm sorry, that's what it says. If you have red on the blue, it says the next bar could be a short. That's how it switches over. If you have just the TV trades on, and I don't know if I have any alerts that are just TV trades in there. They're almost all snipers. But when it switches over, like right here, this red on the blue background said the next bar is probably going to be your short. Right? Same thing over here. This red on the blue background, so the next bar is probably going to be the short. And if you had longs on, it would do the same thing on the other side. Okay, when you have the longs on, it's saying, come on. All right. Well, I guess we don't have that many longs. All right. When you have the longs on, you have a blue on a red background. It's saying the next bar is going to be the long trade. Probably is going to be the long trade. All right. That's the information that is given to you. Now this is with futures. So this was originally designed not so much for futures, like right here. It gave you this saying the next bar would be a long trade, and there's your long trade. But if you did this on, like, I don't know, Exxon, we'll say. I'll just grab a random stock. Now Exxon is 114 bucks, so we're not going to run that on a 4 range chart. We'd probably run that on a 50 range chart. Okay, if you're going to do it on a range chart, it's 50 cents a bar this way. So right in here, well, the last time, I guess 50 range chart is pretty big for Exxon. But anyway, the last one it gave was right here. The last short it gave was right back here. The last long it gave before that was over here. So on the range bars it does work well, but it's too much. We have one guy that used to run that on a 15-minute chart. He might still run it on a 15-minute chart, and every morning when he got a signal every morning he was able to make a buck when he got the signals in the morning. I don't know if I got longs and shorts on. I do. Okay, I don't have the bias level on. I can put on the mid-trend trade and see. But that's the way that it works with the TV trades. All right. For stocks, it gives you a notice ahead of time, like on a 15-minute chart. You would get a notice 15 minutes ahead of time saying, okay, the next bar is likely the one that's going to give you the trade. All right. If you had red on blue or blue on red, like this one right here, it said the next bar is likely going to be the long trade. So you wait for the next bar, it wasn't. Then the one after that you would think would be, but it wasn't because of the down close on this. But that's the way that works. Like this red over here said get ready for a short, and then it didn't give it for 2 more bars. So on this one right here, you're ready to take the trade when the bar closes. You have 15 minutes between the time that you get the alert and get ready to place the trade. But that's equities, and I don't know how many of you guys actually trade equities, but it does work with equities. Okay, why do you use a 4 range chart? Then you have to add, subtract 5 ticks. Well, I was just using that as an example, Wayne. I wasn't really sticking to the 4 range. But that was just an example. So if we go back, we can go back at anything. What time is it? It's 3:30. Okay, so we're half an hour in. I want to make sure I answer everybody's questions, but I also want to make sure that you guys understand. It doesn't matter what you're trading. The market's always doing the same thing, right? It's going down, then it pulls back. It goes down, then it pulls back. It goes down, then it pulls back. You see how this one right here did not exceed the prior swing low yet? It's getting pretty choppy right here. The market's kind of going sideways. It's found support right here. So what you have to wait for right now on this is for it to get outside of... I gotta find how to use drawing objects on this. It should be a simple thing, but when they upgraded this, they messed it all up. Select a dashboard metric to pin here. That's not it. Session info, that's not it. That's not it. That's not it. No. I gotta figure it out somehow. I guess I'm not gonna do it right now though. Tools, maybe it's under tools. Nope, those are polls in the timer. That's not it. Camera, mic, react, record. Nope, it's not there. Anyway, yes, the whole idea behind this meeting was to show you what to expect out of a trade, how to manage a trade, how not to get into trades that are not likely to work out, or how to avoid trades that are not likely to work out. So I'll go back to the NQ here. Okay, I'm going to put the NQ on a 31 range. Okay, so this is what I'm running in the morning right now, a 31 range NQ. And this is just using regular TV trades right here. I mean, it was killing it this morning with just using regular TV trades. But every time you get a trade, you want to have a lower swing before you take another trade. Alright? You want to have a lower swing before you take another trade. So you get a trade, you get a lower swing, you get a trade, you get a lower swing. In here, we didn't get another trade. This is not using the sniper though, this is using just regular TV trades. Okay, so you can, you can use just this if you want to. The sniper is going to give you a lot more trades. That was the whole idea, was to give you snipes, quick ones. All these ones right here in the middle, and then if you put the aggressive one on, hold on, whoosh. Right, that should give you a lot more. And there they are. Now, these are the same thing. Alright, the aggressive ones are usually going to come after the pivot. They usually come a bar after the pivot bar. And there will be times that you can have the aggressive one without the actual pivot, like this one right here without the actual pivot. And there will be times that the yellow gives you a signal, and you don't get the signal for the actual snipe, but you do get the signal for the aggressive snipe. You see what I mean? In here, on both of those, it probably said the next down close would be a short. But there was a disqualifying factor for this. However, this one said it's okay to take. It's up to you how you want to manage that, if you want to manage that. I did change it so that you can have that shut off and still get the notice that you're going to have a trade. Just know that if you get this yellow one and it says next down close, the next down close is referring to probably the bar before you're going to get the black one. Bar before you're going to get the aggressive one. You're going to get the aggressive one after you get that down close. In most cases, it's not going to be the first down close, it'll be the second down close. Okay, if you're using it that way. Yeah, I don't, does bias have it? You can put the bias on here, it's obviously, it's going down, you're only having one side here. You can put the bias on right here, it'll probably take out that long trade right there, if I put it on. Yeah, I got rid of the long trade right there. It's up to you if you want to trade with a bias. It's totally up to you. It would probably get rid of some of these in here too. But there are things that I wanted to cover that I know you guys probably didn't know. On what one are you talking about, Casey? I don't know. Every one of these, that's a win, that's a win, that's a stop, that's a win, that's a win, that's a win, that's a win. Which one are you saying is more stop outs than winners? What's right here in front of us, there's 7 trades and one of them stopped out. This one. But again, I'm saying if you can get into one of these trades and get enough to get your goal for the day, achieve what you want to achieve, then you shouldn't be trading all 7 of them anyway. You know what I mean? The yellow arrows are not trades. Okay, if that's what you're referring to, that might be what you're thinking. Okay, the yellow arrows are not trades. The yellow arrows are preludes to a trade. They should be stops out. They should be stop outs. Every yellow arrow should be pointing in the wrong direction. Because, well, I'm not saying pointing in the wrong direction, but the bar should be closing opposite the direction that the yellow arrow is pointing. So the yellow arrows are not trades. The yellow arrows are preludes to the trades, so that you know. They're the thing that gives you a notice over here that says the next down close, the next up close. Okay, that's what those are. So if you're mixing those up with the actual trades, then that would be a bad thing. Now, I know that there's a ton of trades if you're doing it this way and you're doing it on this time frame. There's a ton of trades, but there's a ton of money to be made. This morning, in the room this morning, with all the other stuff that I was doing in the room this morning, I was up 228 ticks on the NQ. And I missed a ton of trades. I was up 228 ticks on the NQ. And that's, I don't know what that is. But I achieved my goal, so I'm not trading 20 contracts anymore. I'm at 9 contracts right now. I went down to 9 contracts because it's the 9th month. But I think that was 228 times 5. It's $1,140 per contract, and I had 9 of them on, so I was up 10,260 on the NQ this morning. Gross. The black signals are better than the purple. The black signals are more frequent than the purple, and they take longer to develop than the purple. The purple signals are going to happen usually the way that it's going to work out. Usually the way that it's going to work out is you're going to have a purple one followed by a black one, a purple one followed by a black one. Usually that's the way it's going to work out. Right now I only have the black ones on, but if I put the purple ones on, usually the purple ones are going to be right before the black ones. Purple one, black one, purple one, black one, purple one, black one, purple, black. Now usually they're going to be right next to each other too, just like that. The purple will be on the pivot and the black will be the bar after the pivot. The black waits for a little more commitment than the purple does, in one sense. It waits for the purple to happen. But if it doesn't happen, the black can still trigger. Okay? The black can trigger without the purple happening or with the purple happening. Think of it, where's my drawing thing? Here it is. I want to kind of draw something for you. Alright. Nope, that's not it. Let's do this one. Think of it like lines like this. Okay? And within those lines, for the black one to work, we'll say for the black one to work, it's got to cross below that line. For the purple one to work, it's got to cross below that line. Okay? So usually, it's going to go from that line to that line. So you'd have your cross there would set off the purple, your cross there would set off the black. But it is possible to have the black happen without the purple. Okay, without getting into too much detail. So you can have the black happen on a smaller pullback, then trigger the black. But on a deeper pullback, it'll trigger the purple. You see what I mean? Remember what I was saying about the market always going up and down and up and down and up and down? So on a deeper pullback, when it starts going in the right direction, it's going to trigger the purple. And then if it continues in the right direction, it's going to trigger the black. So you have 2 opportunities to get in from the purple arrow. And usually the black arrow is all by itself. Right, if you think of it that way. This morning it was the stuff that I made that on. This morning would have been the equivalent of the purple arrows for the most part. Wayne. Alright, I wasn't using the purple arrows this morning, but the majority of the logic behind the trades that I took this morning is what creates the purple arrows. So I don't know what trades I actually took, but I was on the NQ31 range, and in the period between, let's do this, and we'll scroll back and we'll go and look. I don't have the actual trades on this chart that I took, but I can tell you that I started out, my first trade of the morning was a stop out. I think it was this one right here. That was my first, this one, no it wasn't that one. One of these maybe, I don't know. My first trade of the morning was a stop out on the NQ. I stopped out and then I got it back on the next trade. It might have been this one right here. Might have been that one. Then I stopped out on and then I got it back on the next trade. That one right there. I think that's how it worked out. I stopped out on that. I got it back on that. Because I went from minus 36 to plus 12. Then I stopped out again a few minutes later. Somewhere else. Probably right in here. I stopped out again. I went to minus 24. Then I went to minus 12. So I had a little bit of a gain. And then I went from minus 12 to plus 36 somewhere. And then I went from plus 36 to plus 52, and plus 52 to plus 100, and then I screwed something up. I think right in here I screwed something up. I got a plus 48 on that, and then I accidentally left an order on, and it triggered me in and made me long at the wrong time, and I lost 16 ticks on that. And then I had another 48 right there, I think, and then another 48 right there, I think, and then another 48. It was later on. The last one was later on. I had another 48, and then at the end I had 12 at the very end. That's how my morning went. Okay. But that's not what you see in the room in the morning. You don't see me using the TV trade stuff in the room in the morning. I'm using different things, and it all kind of plays in together. There are things that are triggering these purple arrows, and you guys will have the benefit of more stuff that's going to qualify these and disqualify some of these. Like there was one trade that triggered a little while ago. It would be like this black arrow right here. You guys are going to have the benefit of stuff that's going to stop most of those from happening. Alright, I'm working on it right now. I've been working on it, but it's all behind the scenes stuff. You're not going to actually see it. You just won't get this black arrow anymore. You won't get that one. You won't get that one. Things like that. You won't get that one. You won't get that one. I'm filtering out things for you guys, but for now what you need to do is just get used to taking the trades. Pick one, take the trades. If you want to do the aggressive ones, do the aggressive ones. If you want to, there's plenty without the aggressive trades. There's plenty of trades here to get in there and make your money. I know some of them stop out. That is true, Casey. Some of them do stop out, but right there, that's, I don't know how many ticks that is. It goes from 949 all the way up to 969. That's 20 points. That's 80 ticks. 80. It's $400 with one contract right there. So if you have 10 contracts on, that's $4,000. It's, there are so many opportunities. That's what this is right here, I think. Do I have the bias on? No, I don't have the bias on this. If you put the bias on, then that'll keep you on the right side of things most of the time. It should get rid of 1 or 2 of these trades. But this is all that you need. Look at all these trades. There's just a ton of them. And even, if you didn't want to risk that much, like the stop on this, I use a 36 tick stop on the 31 range. I use a 36 tick stop. So if the stop is too much at 36 ticks, go to the micros. If you trade 5 micros, it's the equivalent of having an 18 tick stop. Okay, but you're trading on the same time frame. You're getting the same trade signals that you would get from a larger time frame. So you're going to have bigger runs. You're going to have more significant trades. That's what I was getting away from. For those of you guys that have been following me for a long time, you know that I was trading on really small time frames over the years, and that was because I was trapped into a really small time frame, of the day. I was trapped into 2 hours a day. But I'm not trapped into that anymore, and I've achieved everything that I wanted to achieve as far as that stuff goes. So I want to make it easier now. I want to make it easier for you and make it easier for me. It's easier for me to explain this than it was for me to explain. Let me hit save on that. I gotta go to the old stuff. I don't even know if I can. I don't think I have any. This might be something. That might be something. I don't know what's going to open up here, but we see the time frames: 7 range, 7 range, 7 range, and 15 range, and see all the stuff that's on these charts. That is a ton of stuff for me to explain. I don't want to do that anymore, and I don't have to do that anymore, and you guys don't have to learn that anymore. This is simplified. This is everything you need right here, and you're getting warnings ahead of time letting you know there's a trade coming up. While I've been talking, this trade right here just happened. This is all you need. One time. That one trade right there is all you need. It gave you a warning right here. 2 bars notice to get ready. And there's the trade. Right here, it didn't put in a higher swing, right? No higher swing, so you're not looking for another trade right now. So everything that I've been saying, it comes right down to this. This didn't put in a higher swing, so if you got into this trade, you expect it to get there, and that's part of the diamond principle that I said a couple weeks ago, right? Remember the diamond principle. And we'll go back to my drawing that I've got stuff all over now. Remember the diamond principle. gets through this first, then doubles it. Gets through that, then doubles it. All right. It's like double diamonds. That's what you expect. It gets through that and then double it. Get through that and then double it. So that's what you expect here. It got to it, but it didn't get through it. So you don't expect it to go anymore. You expect it to turn down now. Possibly the end of the trend. Remember, when it's making a trend, it's making higher highs and higher lows all the time, over and over again. You're getting higher highs and higher lows every time. So, where's my drawing again? Drawing, here it is. Like over here, where you're getting higher highs and higher highs. If that stops, if suddenly you're pulling back like this, and your pullback happens to be really deep, below that level, and then it starts to go up, and you don't put it in a higher high, well, you know what you just did? You just changed trend right there. Because now you have lower lows and lower highs. Right? So now you have lower lows and lower highs. So you just changed your trend. You changed from an uptrend where you had higher highs and higher lows to a downtrend where you have lower highs and lower lows. And that's the way that the markets work. And it's the same thing again and again and again and again. That other stuff that I just showed you, for those of you guys who don't know, that's the stuff that I've been doing for years. What I've gone to now, what I was showing this morning, what I can show you guys right now, you don't need to have any indicators to really understand what the price should do and when you should stop looking for it to go up anymore. I'm just looking at this right here. It went down, it went up, it went higher than this level. Expect it to do it again. It goes down, it goes up, gets back to this level, it went higher. Expect it to do it again. It goes down, it goes up. It gets through that level again. Expect it to do it again. It goes down, it goes up, it went through it again. Expect it to do it again. It went down, it went up. It didn't do it this time. What's different? What's different? You don't have any indicators on the chart, right? So what's different? It didn't make it through. So what do you expect? Well, maybe it's going to turn down. Did it get lower than this level? Yeah, it did. Just a little bit. So now you have lower highs and lower lows. Is it going to turn down? Well, I don't know yet. Did I put the shorts on this? Well, this is a sniper, so it's going to give you shorts if it has shorts. I think we have the bias on, right? So if we shut the bias off, it might give you a short right here. Yeah, see, it gave you some signals. It was about to give shorts, but it hasn't given it yet. Okay. Oops. Did I do that wrong? Yeah, I'm going to put the bias back on. Got rid of most of those. So you see, a lot of times in there, it was just about giving you, well, more signals actually. More long trades through there. Right here, just about gave you a short, but it didn't come together. Right here, just about gave you a short, but it didn't come together. Right here, just about gave you a short, but it didn't come together. So you can see what the bias is filtering out these things for you. But that all makes sense, doesn't it? And that's really what I wanted this whole webinar to be about, is so that you guys see what to expect and what to understand. You have this, you don't need to have any indicators on the chart. As long as you understand this, from here, it should get to there at a minimum. It should get to there. From here, it should get to here at a minimum. From here, it should get to here at a minimum. It didn't go there. You had enough room to take some profit. All right, this is the NQ. So you had 1950. Let's say you got slippage and you got in at 19, and it ran down to 10.5. Let's say 11. 8 points. 32 ticks. 32 ticks. It's $160 a contract, and that probably took a minute. Less than a minute. If you have 10 contracts on, that's a good amount of money for no time at all. This one over here would have been the same thing. Now we got the higher swing in place. Okay, so now we're looking for a pullback and a chance to get long. Right? Should all make perfect sense to you now. Does anybody have any questions about any of the stuff that I'm saying? For those of you guys that know what's going on in the morning session, if you're in here and you're part of this, then you guys have the best of both worlds, because you have access to the stuff that I'm doing in there, and you have access to the stuff that I'm doing in here, and that is great. It's gonna be even better. This stuff that I'm working on is gonna be even better. I kind of want to show you, but I'm going to show you next week. But it has to do with like that picture that I drew stuff like this. Kind of it gives you a little bit of a background as to what's going on here. You know, when you should, well, so you understand kind of what's going on without having to see anything, without having to make any decisions about it. It's making all the decisions for you. Now, if I put the aggressive sniper on, you probably have a long trade right there with the aggressive sniper. This one here filtered it out, but it's probably right here if I put the aggressive sniper on. We got a higher swing, so it's pulling back right now. This is saying the next up close right in here. This is not on the 4 range, but here it is right here. The next long right here, long the next up close. So it just gave you that indication right there, and it's looking for the next up close right now. And if we get the next up close, then it'll trigger. Alright, so it wasn't there. Now it's pulling back really deep. So it may disqualify itself pulling back so deep. Yeah, you see that red right there? It's probably going to disqualify itself and not give you a trade. It's going to change to a red background, probably. Red background disqualified the trade. You see how all that comes together? All those little pieces? There's no question, right? It's not, maybe it's a trade. There's no question. It's not a trade. It's clearly not a trade. It's starting to set up a short trade. It's almost there for a short trade right now. You don't have one of the yellow arrows yet for the short trade, but it's getting there. If we shut the bias off right now, I bet we'd have a yellow arrow. You see, it just went to blue on a red background. You're probably not going to get a short trade when it goes to blue on a red background like that. So, you know, if we shut the bias off, you might have got something right there. Yeah, you got the yellow arrow anyway, suggesting you almost had a short trade right there. If you put the aggressive ones on, you probably have a short right here, a long right there, a long right there, a short right there, a long right there. If you put the aggressive ones on, that's probably the case. Let's see. Yep, right there, right there, right there, right there, right there, right there. See, they are aggressive. They really are. Yeah, you can. There's plenty of money to be made using just the purple ones. Okay, you don't need to have the aggressive ones on if you don't want to. I just, you know, I see opportunities when I'm creating things. I see things that happen over and over and over again, and I want to make them available to you. You don't need them, but I want to make them available to you. Like if you were fussing on this one right here because we didn't get the trade, you know, or if you were fussing right here because we didn't get the trade, you know, the black one probably did. Black one probably got a short right there, and it's probably got, you know, the aggressive ones probably got a long right there and a short right there. So if you see that happen, if you get one of these and you're expecting the purple arrow and you didn't get it, like right here, you didn't get it, you put on the aggressive one, I bet you're going to get a black arrow right there. If you really want to put a trade on. See, we did get the black there and the black there, and I bet on the down close right here we'll get the black. The black's not going to come on the pivot. Most of the time it's going to be the bar after the pivot. And there it is. Oh, that gave you the purple even. But you see how it walks you through the trades. And if you know what you're looking for, then, you know, it's not hard to do this. It's not hard to make money. It's just over and over and over again. And, you know, if you wanted to do it with the micros, you don't have to trade this stuff that's $5 a tick. You can trade it as 50 cents a tick. And it used to be that the micros were, the commissions were too high to want to scalp with micros. I mean, this is kind of scalping. You know, these are 31 range bars. So, I mean, to me, scalping is taking 4 or 5 ticks at a time. You know, right now you're taking 50, you know, 40 or 50 ticks at a time. That's not really scalping to me. But if you wanted to trade them with the micros, I mean, you can trade, you know, 5. It takes 10 micros to make one regular contract. So you can cut your risk in half by trading 5 micros. And there's plenty of money to be made. I mean, while we've been sitting here, how many trades have triggered that have made money? There was one right here that stopped out. That made money, that made money, that made money, and that made money. And that was all in the last 10 minutes. Well, the last 30 minutes, I guess. In the whole last hour, it was this one, one stop out, that one, That one. That one enough to get the stop to break even, but you wouldn't have done that anyway because that didn't put in a higher swing. That one. And that one. So you had one stop out in like six profitable trades. I don't know. Pretty good stuff. I just shut the bias off. It did have the bias on, and if you have the bias on, it's going to take out some of those short trades, I think. See, if you have the bias on, then you had 1, 2, 3 trades that triggered on this 30-minute chart. And this one would have stopped you out, probably. I have a 36 tick stop, so it would have stopped me out to the tick. Could have gotten it mostly back on that one right there. You would have gotten it all back on that one right there. And then you've been full profit on that one right there. So in the 3 trades that you had, it would have been plus probably 50 ticks a contract in this period that we've been talking. I should say that I've been talking. But if you started at 2 o'clock and you have 2 nice trades right there, that worked out just fine. Again, you're not here to trade a million times, right? Alright. So, next week's meeting is called Trader's Lobotomy. And that is scheduled next week for 3 p.m. on Wednesday again. I do have another one that's gonna be scheduled for 2 p.m. on 3 p.m. on Tuesday too, but that's through Online Trader Central. It's gonna be a little bit different, but I want to make sure I answered everybody's questions. And if you are not on the trial, if you haven't taken a trial yet, even if you have taken the trial, just let me know. If you want to start back up, just let me know. If it's within the last month and you told me you wanted to cancel and you want to start back up, I might not have canceled you completely. I might have just paused your collections, paused your account, and I could just turn it back on. Maybe, I don't know. It depends. We had one fella that did that today. But if you haven't taken the trial, then go here to the home page, I guess. You can go to the home page if you want to. You can go to the sniper page, so I have it on the sniper page too. Just scroll down here. The trial is right here. Is one way to take it. There's a 3-day trial, right? After 3 days, it's $25 a week, or you can do $90 a month. $90 a month is 10% cheaper. Or you can do the annual. If you want to jump right in for the annual, that is the best discount, and then you don't have to worry about it monthly. It is now just about time to wrap up the meeting. So, let me go all the way to the top and make sure I answered all the questions. It looks like I did. Casey, I answered your questions, right? Now again, I want to make sure that you understand that the yellow arrows are not trades, right? The yellow arrows are preludes to trades. The yellow arrows are not trades. They're the ones that give you the thing that says you have a trade coming, the next down close, or the next up close, or next down close. If it's pointing down like this, it's saying the next down close. Pointing down says next down close. Pointing up says the next up close. Alright? They are notices that you have a trade. Even if you don't have the alerts on over here, if you don't have the alerts triggering and firing off over here, you could put that visual thing on. And I put it on, originally I only had it on for the green arrows. You can have it on for the black arrows too. If you shut the purple arrows, and the green arrows, the purple arrows. If you shut the purple arrows off and you just have it for the black arrows, you're still going to get it, but it's not going to be on the next bar. It's going to be the bar after, usually. Alright, it's not going to be on the next up close. Like it says, it'll say over here, the next up close. Just get ready for an up close. If you have a yellow arrow like that, and then you have a pivot bar like that one, it's probably the black arrow is probably going to be on the bar after the pivot bar. Okay, that's usually how it's going to work. Okay, if you have one of these, then the black arrow is usually going to be on the pivot bar. The bar after the pivot bar. The down close after the pivot bar is usually what it's going to be. This is the pivot bar. This is the down close. This is the pivot bar. It didn't actually give you one there. This is the pivot bar. This is the down close. This is the pivot bar, down close, pivot bar, down close, pivot bar, down close. Okay, that's the way it's usually going to work. Pivot bar up close, pivot bar up close, pivot bar up close. It waits for confirmation. Okay. All right. It is 4:01, so I'm going to wrap it up. If anybody has any questions, you can email me, support@targetviewtrades.com. You can text me at 617-943-3298. Again, that's 617-943-3298. All right. Thank you guys for coming. If you haven't taken the trial, sign up for the trial. If you were on and you wanted me to pause it for you and you want me to turn it back on, just let me know. Okay? However you want to do it, just let me know. I am open to, I don't know, whatever you need. But that's it. I'm going to wrap it up. Thank you all for coming, and we're going to shut this meeting down right